What's up everybody, Ali Tarafter back with a brand new video. Today we're going to talk about business credit, and if you're new to my channel, don't forget to subscribe, turn that bell notification on so every time there's a brand new video, you'll be first to be notified. So I know that this has been an up and coming topic for a lot of individuals who are in the credit repair business and the space, particularly individuals who have gone through credit repair but now are looking to actually establish business for themselves, establish business credit, get some financing on the credit's merit of the business, and of course be on their way to building their wealth, right? So today's topic is going to be more on the initial stages of actually getting business credit, what you need to do, how you need to prepare, particularly in the areas of where you actually need to register the business, how to register properly and effectively so you don't make mistakes, and understanding the laws and regulations around that in particular, and of course going up and beyond to start staging your business so that it's actually in position to start building that business credit without getting any type of denials or refusals, right? So of course, there's a logical way of building business credit. There's a very structured way of going about building business credit that you need to kind of know and kind of understand so that at least you're not, in a way stuck trying to figure it out on your own. Now, a lot of people pay a lot of money for getting into a program where they will help you build the business credit, and you can do that. You can go that route. Actually, I myself offer these type of programs. You don't have to pay expensive fees. We do have packages where we can help you fix your credit, and while simultaneously doing that, we can establish business credit for you, given that you have a registered business. And if you don't have one, then definitely we guide you on how to go ahead and register your company. So the first steps in business, registration, particularly in the areas of compliance, and I think one of the biggest things I want you to understand from this video and take away from this video is that when it comes to business credit, everything is based on compliance. And what I mean by that, it's not based on regulations as like, oh, did they follow the laws and all that good stuff. And what I mean by compliance is if your business is credit ready. If it's not credit ready, you're going to have issues, you're going to have problems, particularly when you're trying to go out there and start with like the regular vendors like net 30s, net 10s, net 90s, whatever or not. Those companies are going to give you problems if you're not prepared the right way. So our goal today is to give you the compliance information that's necessary for you to be registered the proper way. Once you're registered the proper way, then we can go ahead and discuss the possibilities of what to do, how to do them, what are some requirements before you can actually go out there and establish your business credit, among all sorts of other things, okay? So the very first thing you need to focus on and concentrate on is, where are you going to incorporate your business? I always recommend, building an LLC. But a lot of people will say build LLCs because that's the best way to go about it. It's the cheapest option. And yes, it is. But you have to keep in mind, okay, this is one of the things that, when I come and give you a discussion on business credit, it's not going to be the generic stuff that you see on the internet where you can just go out there and try to fetch which one's the best price and then just go with their program. My stuff is more informational in the context of, and I said my background is from investment banking. So I'm always thinking, 16 steps ahead, in case you want to take your business to the next level and start getting some investors or even angel funds, seed capital, venture funds in the future if you want to get some sort of institutional capital with institutional support to leverage and grow your business in a very huge capacity. But at the beginning, of course, you have to establish something. You have to have a structured foundation where when others look at your business, they feel more comfortable feeling that, okay, this is actually well structured. They're very compliant. They're very institutional-like. They have a proper system in place, and I feel confident, either investing money in them, lending them money, or even to the, like investing with my resources and of course myself into their business, right? So positioning is everything, right? And when it comes to business credit, you have to have positioning. So let me give you a piece of advice that I feel is going to be extremely helpful, and I say this because I have a story to back it. Okay, so when you start registering a business, you can do LLC if you don't intend on raising institutional capital in the future. So a lot of people go out there and they go through the route of doing what we call a Regulation D, which is an exempt offering. That means you don't have to register your investments with the SEC. So you can just raise it, freely. You just have to file a Form D. But if you do that, you can only go after accredited investors. And what accredited investors are is they have to have a certain level of income, typically, 200,000 or so. They have to have some sort of assets, possibly $1 million or more. That doesn't include their primary residence. There's other forms like, they can be a fund manager that has, in control of their, under their umbrella, $5 million or more, and all sorts of other things. So those particular criteria is what, basically demonstrate an individual is accredited. And if you're doing a Form D or a Regulation D offering, 506C is basically the most open platform because you can actually advertise for that. But your disclosures have to include like, hey, look, this is only for accredited investors. So if you're planning to go that route, if you're planning to raise some capital, a lot of people I know in the institutions and in industries have used an LLC. And that's fine. You can use a limited liability company to go and raise your capital. That could work for you. In fact, it works really well. But my recommendation is, if you're actually, you have to think about these investors, right? Like even like a lot of people are premature into thinking, okay, I'll just use my LLC, restructure it, and create a offering memorandum, which is the document that's needed to present to accredited investors prior to them making the decision on investing in your company. So once they do that, they feel, okay, if I just do it this way, if I just restructure it, in a very simple plan, investors are going to come on board, and that's going to be fun. We can think about an exit down the road. And what I mean by exit is your business, right? Like when you're raising money, when you're raising investors particularly, what you have to understand is they have something in mind, and they want profits. Everybody wants profits. When they invest in a company, they want to grow with the company. They want profits, whether it's a debt, right? It's a debenture, which is like a debt offering, which you issue, let's say your business shares, and they invest in that. And when they invest in that, they expect a fixed rate of return, which is debt instrument, right? Unless otherwise, you say, look, it's an equity offering, which in return is you're issuing your business shares. Now they're partner in your business, and as the business grows, their shares grow. So you have those type of combinations. You can also have a what we call a hybrid, right? You can have a debt and an equity. So that's a convertible debt, right? Like you can start at fixed interest, and at a certain threshold, when a company reaches a certain milestone, it'll be converted into equity. So there are all sorts of different ways of going about this. And I'm telling you from experience, I'm not saying that I'm a securities attorney, or I don't endorse that I'm an investment advisor either. But having helped a lot of companies, having been in the investment banking background, I come from a family office background, which essentially is, individuals and families that have over, typical standard back in the day was $100 million in assets or more. But now you can start at 10 million, and they have that whole holistic solution to manage their money in-house and invest their funds in-house, and basically allocate their money based on what they feel comfortable with. So going back to that topic, right? Like when you incorporate your business, when you register your business, you have to think about the investors. You have to think about, okay, well, if I'm going to go ahead and raise capital through investment capital, and particularly investors, then I need to think about what they're thinking, for themselves. And they're thinking, I want a financial exit. I want a lot of money. I want large profits, or I want this company to grow so big that we're going to one day do IPO, which is initial public offering, where you issue your shares to the public and you explode your growth. So if you're going to think that route, if you're starting your business because your intent is one day to be public offering, then you have to start the foundation of not a limited liability company, but rather a corporation, usually a C Corp. And the reason I say that is because if you're ever thinking of going that route, your shares in a C Corp can be issued to the public, and you're going to have less costs of restructuring. You don't have to spend so much money in the future. So there's a lot of requirements to go public, and we're going to discuss that down the road in another topic and video. Today I just want to give you the essentials of business credit and registration process, but I want you to think about that. If you're coming in, if you want to register your business, you want to build some business credit for yourself, you have to think about, okay, well, what's my exit plan, right? Like, am I going to just have this business and keep it small, mom and pop type of, or brick and mortar type of operation? And if that's the case, then it's fine. A limited liability company, you build your business credit, you're happy, your business is doing well, and that's it. But in the future, if your intent and plan is to incorporate an element where you're going to be raising capital from clients, investors, from accredited investors more specifically, or even venture capital, and you want them to benefit, right? The only way to attract those type of investors is to show them the big picture. And typically it's like a financial exit. Like I said, it would be an initial public offering or a buyout from another company. Like, let's say if you're a technology company, maybe the big picture is to get bought out by Google or Amazon or something like that, right? So if that's the case, if you're going into business with that intent, then definitely I would recommend that you incorporate a C corporation, register a C corporation. Yeah, a little bit more expensive. You need more financial statements, disclosures. But if you get used to the accounting element, if you have a proper structure in place, you're going to be, all the better in business. You're going to actually feel more responsible. You're going to have your own accounting practice and your internal affairs. I'm not saying like, register as an accountant. I'm saying you'll have the ability to kind of look at financial disclosure statement, loss statements, profit and loss, balance sheets, all these type of things that I think would be essential for any business owner to know, by the way. Especially if you're going into business, you need to know the math, right? So these are some of the things that I recommend. If you're particularly raising investors in the future, if you want them to benefit, if you want to give them the big picture and say, look, we're going to take my company public, I just need this money to grow and get to the stage or whatever it is, And at that stage, then C corporation would be the best. But like I said, if you want to keep your operations small, to the point, like I said, small mom and pop, just want to build business credit, or like a brick and mortar type of operation, then definitely a limited liability company is fine. So the reason I say that is because you have to think about the foundation. When you start a business credit, you have to think about the foundation. If you don't have the right foundation, it's not going to be helpful. Okay, so particularly, let's say if you're a C corp and you raise a lot of money, you go public. Now you're dealing with financial institutions on a very, very large scale. So the credit level is going to definitely help out in that situation. Not a significant amount, but definitely can add like a 10 to 20 plus percentage and different additional credit assets to your books, and we can discuss that down the road. I don't want to confuse you too much. I just wanted to say that, look, if you're going down the road where you're going to raise capital and you want to give them, you want to go public, then think about a C corp. If you just want to keep it small, to the point, and local, then LLC is fine. So that's the first step, right? So think about the foundation. The second step in business credit is to register. So before you actually go out there, you also have to think about where you're going to be doing business. Okay, if it's, let's say, in California, and if you want to just stick your business to California and stay within that state, then that's fine. You can just keep it that way and just do your business that way. But let's say if you're going out there and you're doing business in New York, Texas, all those other areas, keep in mind that you may have to register what we call a foreign filing in those areas. The reason why I say that is because if you're going to be doing business and taking customers and transacting in those states, you need to have some sort of registration documents that represent that you've done business to protect yourself in case something happens. A lot of people do, the Delaware LLC, and they go out there and then they, do business in New York and all sorts of different states. And when litigation happens, yeah, it happens in Delaware. But what happens now is, they build a bad reputation because it's all that more easier to conduct legal affairs within the state that you're doing business with, because now that you're protected within that state's right based on the limited liability protection and all sorts of other clauses. And people say, well, Delaware is great for tax reasons. Yes, it is. You can incorporate in Delaware, but if you're doing business in New York, you have to file a foreign entity filing in the state of New York, or similarly in the state of Arizona, Texas, or whatever you want to, whichever state you want to do business in. So keep that in mind. There are additional costs, yes, but that is something that you have to keep in mind, right? So that's important. You have to keep that in mind. Second thing you want to do is first do a name search before you actually start registering. Meaning, like, okay, you go out there. This is a very basic thing. You go to the Secretary of State of whatever state you want to register your business in, and you do business search. When you do that, you put in the name of the company that you desire to incorporate. If you feel that there's a name that's already taken, then you try different combinations. Now, one of the biggest things to that is, let's say you're successful at registering your company in the state of California, but you also want to do business in the state of New York. You want to think about doing name searches on all the states that you feel that you're going to be doing business in. Because if you register your business successfully in the state of California, and now you have to register a business in the state of New York, and that name is already taken in the state of New York, then you have to file something called the DBA, doing business as, right? But with that said, like, maybe you want to think about, okay, well, to avoid all that headache and confusion with customers potentially when I'm doing business with customers down in New York, right? I want to file a name search. I want to look at the names to make sure it's universally available. So think of a creative name that can help. Okay, so that's what you want to do. And once that's done, you do your registration, you incorporate your LLC or C corporation, as we discussed, if you're thinking of the bigger picture here. Once that's done, what you want to do is, the address, and that's a critical component. Now, a lot of people will register their business and put in their home address. At the beginning, that's fine. You can always amend documents, being like you can go online and basically make adjustments. Amendments is what we call it, to change the business address. But I always recommend, like, even if you have a residential address of your own, you might want to think about, getting a corporate address. Sometimes virtual offices are a good place to start. A lot of people go against that, but typically speaking, if it's a physical location in a corporate environment, it's a good place to start, because you kind of get the setup, you kind of get the idea, and then down the road, if you want to get your own lease, you kind of already know the structure. And corporate, virtual offices are good because there's so many different things you learn from that. It's not just about, let's try to trick the lenders or anything. Lenders are aware. Okay, you're a startup. Lenders are aware, that this is the address that you use. You might want to have additional services like reception, et cetera, et cetera. But one of the biggest things you want to do is, once you're in that virtual corporate address, you get to learn their system. You can ask them. They can guide you through the process. Let's say eventually, if you want to get your own leads, it's something that you want to know, particularly if you're going to, and raise some institutional capital down the road, or accredited investors down the road. And you want to kind of get the system to format, how reception works, how what type of telephone service, what kind of lease agreements are necessary to conduct business in those areas. How's the setup? What makes it more efficient? And ask around and kind of learn the process at the same time. So there are double benefits to that. So once you get that information and set yourself up, then you go ahead and incorporate your business. Once you register that business, make sure you have a separate phone number for your business. Whether it be local, yes, you can do that. I recommend a 1-800 number. There's many suppliers out there, but I recommend callfire.com. They're pretty good. They're cheap. I think it's like $2 or $3 a month for the phone number, and excuse me, you buy them credits. So the credits, 5 cents a minute, whatever. So really cheap. You also might want to get a fax number. Fax number, you can go to onesuite.com. They're pretty good. You have HelloFax, you have MetroFax, all these areas. I'm not affiliated with any of them. I'm not, sharing the affiliate links with you, so you can clearly tell that I'm just giving you these resources. So write it down and check them out in your own time. But you want to get a fax number. You want to create a website. Now, Bluehost is possibly a great area to start to give you a free domain. You get free WordPress hosting. WordPress is good because it's easy to set up. There's not a lot of complications. Bluehost automatically updates your plugins and themes and all that good stuff, which means that you don't have to worry about security issues and all that great stuff, right? So you want to do that. You want to set up your professional email, at yourcompanyname.com, your name, whatever it is. And once you have all that set up, you set up your website, have a professional logo, have professional letterhead, set all that information up, and the structure up before you even start opening a business bank account, right? So you do all these things, and then at the end, what you do is you create a professional voicemail, your company, your name, and then once you're done, then it's time to go ahead and open your business bank account. Now, my recommendation with that is at the beginning, they might try to promote you with, let's say, hey, look, if you have good credit, you can get some business credit here. They're going to go based on your personal credit. Don't start doing that yet. Put a small deposit, $200, $300, even $100 is fine. Open your business bank account and don't apply for anything with your personal information, including your social security number and any other personal identifiers, right? Because the reason why we're doing this is because, again, we're trying to build business credit. We're doing it on the merits of your business and not your personal. So that's what you want to do. Once you're done with that, then you start applying for, different layers of credit. So they go through different tiers. And we're going to discuss that in the upcoming videos. I just wanted to give you the registration process today, the basic foundation of what you need to do to get started. But just keep that in mind. So just to go through the whole thing again, think about what you want to do. Do you want to keep your business small, medium size, or do you want to go extra large at the end where investors are very happy, they want to come down and you want to take your company public? Based on the direction you want to take, you either incorporate a limited liability company or you incorporate a C corporation. Right? That's the first step. Second thing, understanding your foundation, you got to do a business name search. You got to find out if the company that you're willing to incorporate, the name has already been taken. Do a business search in your Secretary of State, wherever the state is that you want to incorporate. If you plan on doing business outside of your own state, do business search on all those states that you want to do business in. Once you register in your home state, once you have documentation ready, everything certified, only then you go and do a foreign filing in the other states that you want to do business in. Third step, possibly think of getting a virtual address. And I say that because of many things. And I explained to you that the benefits of understanding how the system works down the road, if you want to get your own leads, if you want to grow, if you want to expand, understanding the architect of the actual, how the conference rooms work, what type of scheduling is necessary, et cetera, et cetera. It's a great double benefit. So think of getting that down the road. If you want to amend that, as soon as you get that, you can do the amendments, which is like an adjustment on the registration documents and the Secretary of State with the new address change, right? So once you've done that, you want to think about getting a website, set up your website. I recommend Bluehost. Get a fax number and a 1-800 number. 1-800 number, callfire.com, fax number, onesuite.com, MetroFax, HelloFax, other services possibly. So look at those. Professional email address, logo, professional letterhead, set up your website properly. Once you're done all that, then you set up your business bank account. Okay, that's the foundation. These are called compliance items. Once you're done with all that, the last step is possibly, think of listing yourself and 411. So if you go to listyourself.com, it's free. They give you an automated voice number, and then you just use that and register your business on 411, because now you have all the setup. You'll have the business address, you'll have your business registered, you'll have the website, the email, the fax, all that good stuff is done. Then you list yourself in 411. Okay, so that's the very essential steps of building business credit. That's the registration process. That's the initial foundation, which we call compliance items. And after that, we're going to go ahead and talk about how to build your tier 1 credit vendors. Who are they and what to do and how to apply. All right, I hope you found this video helpful. If you like my content, give this video a thumbs up. Don't forget to subscribe to my channel. Turn that bell notification on if you want ultimate great content like this. You want to be notified, right? So don't forget to do that. And once again, this is Ali Tarafter, your guide and mentor. I'll see you next time. Bye for now.